In this episode of Bitcoin for Millennials, I'm joined by Jesse Myers, a top Bitcoin strategist who helps companies design and manage their Bitcoin Treasury strategies.
This will be winner take most in each capital market.
We'll have a debate and go through everything from MNAV premiums to why some of these companies will definitely fail.
That classic Warren Buffett quote of like, when the tide goes out, you see who's been swimming naked.
Yeah.
And we'll see.
I hope you find it valuable. And if you do, please like and subscribe here on YouTube or follow me on any of your favorite podcasting platforms. I appreciate the support. Now let's dive into this episode. All right, Jesse Myers, welcome back to Bitcoin for Millennials.
Good to be back. Always fun to talk to you, Bram.
Likewise, and we got some spicy stuff going on. You know, we're going to dive into Bitcoin Treasury Companies, and I'm going to grill you, as we announced on Twitter. I think this could be a nice conversation to just discuss the topic in general, and also, talk about some critiques. I think also makes some things more clear, also clear from like your perspective. And so we had some great questions from X. And I think maybe to start, I want to see if you agree with this. I think personally for the general pleb like you and me, it's very important that you have Bitcoin in your possession first before you invest in any of these Bitcoin Treasury companies. I'm personally invested in MicroStrategy and MetaPlanet and Blockchain Group with a small percentage of my my total wealth. But I think it's interesting to follow. I don't know a lot about it. So I just want to set the premise there. Like, I am not an expert on this. So just sharing like my thoughts there. But yeah, do you agree with that statement? Like, have Bitcoin before you invest in this?
We're going to find some topics for me to disagree with you on, but this starter one, I totally agree. The way I view it, so part of this is I sort of had a sequence of events over the last couple of years, really, where I warmed to this concept, right? And one of those important events for me was doing a podcast with Michael Saylor about 9 months ago. And I asked him, like, I was like, I'm 100% Bitcoin. And I live by the sort of mantra that you say of never sell your Bitcoin. But here are these, Bitcoin Treasury companies offering Bitcoin yield. And it's very tempting. Like, what do you say to somebody like me? And he cut right through my setup there. And he said, I think for Bitcoin maximalists, the risk-free rate is holding Bitcoin. But there's also a place in a portfolio for taking risk. And that really stuck with me. And I view it that way now of, so basically I agree with you that, like, I think that Bitcoin is the best asset in history, and it's certainly the best asset for people to hold now. And that's the lowest risk thing in my mind, is to have your cold storage Bitcoin. There's also a place for taking risk on top of that. And you have to know that you're taking risk too. But I think that and this is what we'll get into, I guess, when you dig into the risks that you're taking with a Bitcoin Treasury company and you weigh them against the amount of Bitcoin yield that's possible to gain over time, I think risk adjusted, that can make a lot of sense for a portion of your portfolio.
I think the prime question about this, why would investors pay a premium for Bitcoin by buying a Bitcoin Treasury company stock when the market or like the multiple net asset value is so high? Like, what justifies a premium on those Bitcoin holdings for a Bitcoin Treasury company?
Yeah, this is the best topic, because I think this is what most Bitcoiners are stuck on when it comes to Bitcoin Treasury companies, because you see that MNAV analysis right off the bat, and it seems like a total non-starter. Why would I pay a premium for Bitcoin? I think my favorite line of reasoning here now is let's talk about Apple. Why would you pay a premium for their earnings? You're like, what are you buying when you pay? When you buy Apple stock, you're paying a 33 PE ratio, price to earnings ratio, meaning you're paying 33 times their annual earnings for that stock. In other words, it'll take you 33 years of earnings to get a cumulative amount of cash flow from that ownership stake that's equal to the amount of cash you're paying now for that ownership stake. So that's what's normal in when you're investing in equities, is you are purchasing something that will return you, give you a return over time. And the question is, how much time are you willing to wait? What are you willing to pay? PE ratios have gone too high. I think traditional equities are way overvalued. Value investing doesn't make so much sense anymore because it's the price of admission now to park your money in the stock market. Is you just have to pay a 30 PE ratio, and that's crazy. It should be 10, but that's the world we live in now. And then, so if you're thinking about what's the value of an equity in that kind of lens, and then you think about a Bitcoin Treasury company, a Bitcoin Treasury company delivers value to shareholders in a different way, mostly. It's not about income statement profits that you add up every year, and then that's your PE ratio. Instead, it's about delivering Bitcoin per share over time. So it really means strengthening the balance sheet is what a Bitcoin Treasury company is trying to do, and grow that Bitcoin per share that sits in the treasury on the balance sheet. So it's not about the income statement delivering value. It's more about using capital markets to strengthen the balance sheet to deliver shareholder value. And when you look at it that way, and then you have to run the numbers on it. I just put out a report on this last week, sort of a new metric that we put together called PBID, price to Bitcoin yield delivered. And the idea there is to take a period of time, the most recent period, and that can be a month or a quarter or 6 months or a year or whatever, and back that forward to see how long it would take at growing the Bitcoin per share at the same rate as seen on the most recent period. How long would it take? How many years would it take to grow into that MNAV premium that you're paying upfront right now to purchase some of that stock? And for strategy, it's just under 2 years. Based on, they've delivered 20% Bitcoin yield in the first 7 months of the year. And so if you annualize that rate and compare that against their MNAV currently, it would take you just under 2 years to grow into that MNAV, meaning the Bitcoin per share grows by a factor equal to the current MNAV. Some fancy math in there, but the net of it is that, if you're going to do a direct comparison to PE ratios, well, that's Apple's a 33, but strategy is just under 2. In PBID, in this other analogous ratio of trying to see how many years it'll take you to earn back your investment. So that's why, basically, that you'd be willing to pay a premium, is to get your seat on the train as the mechanics continue to play out. Strategy continues to deliver Bitcoin yield to shareholders, and you got to wait a little bit of time to get your money back. But then beyond that point, it's all Bitcoin gained on paper, right? Like, it's not in your cold storage. So I understand that pushback too of like, do you really own it? But your share value of Bitcoin has grown once you've waited, just under 2 years.
Bitcoin custody is evolving, and on-ramp is leading this change with multi-institution custody, eliminating single points of failure. Instead of relying on one institution, on-ramp secures your Bitcoin in a cold storage multi-sig vault backed by 3 independent custodians, where no single party can move your funds alone, providing an unprecedented level of security. Your assets are protected by a 100 million Lloyd's of London insurance policy, with all transactions fully auditable on-chain and only executed at your direction. This means complete transparency and control over your assets at all times. Beyond custody, on-ramp provides comprehensive Bitcoin services that include trading, lending, inheritance planning, and IRAs. You can view them as your private Bitcoin banking partner tailored to your wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, on-ramp's approach helps you secure your generational wealth with unmatched security and peace of mind. You can sign up at onrampbitcoin.com and use code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. If you first want to learn more, you can also book a free consultation via their website to speak with one of their Bitcoin custody experts. Tell them you came through me, and they'll take extra good care of you.
And if you run the numbers for smaller Bitcoin Treasury Companies growing at a faster rate, delivering more Bitcoin yield per period of time, the numbers are even better. So Metaplan is like 0.4 years to grow into their MNAV is higher than strategies, but it should be way higher based on the amount of Bitcoin yield they've been able to deliver over the last quarter. It would only take 0.4 years to grow into that. And for Smarter Web that I work for, it's like just over 1 month right now, which is because we're younger and newer and have been able to grow Bitcoin yield at a very fast clip historically. But and looking forward, these will slow down for everybody. But how much will they slow down? I don't think that much over the very near term. And so then you're talking about very attractive value proposition to shareholders if they understand that math and understand that they're investing at a premium with the expectation that the mechanics will continue to play out, and they will pretty quickly get into a place where they have grown their Bitcoin invested.
Yeah. Okay, quite some thoughts. I think perhaps most important, at least for me, I hope also for the listener, I think understanding the thesis of Bitcoin in general, the long-term time appreciation, right? I think Saylor base case is the 13 million per Bitcoin in 2042, right?
2045, yep.
2045,
and he's recently upped it, I think, to like 21 million, but yeah.
Yeah, I thought that was the bull. But yeah, well, let's say, okay, 15 million, right? If you don't understand that, you should probably stay away from this, right? Like that is what I'm seeing on LinkedIn, very dumb takes that clearly show they don't understand Bitcoin. If you don't understand Bitcoin, if you don't like Bitcoin, stay away from this. I think that's one, right? Or that's two, because one was, okay, you invest in these companies with, anything besides your cold storage Bitcoin. So I think it would be good to make those distinctions, because eventually now we talk about, okay, what are the differences between, Apple with this 33 years, right? You're basically saying, or they are basically saying, or the market is basically saying, like, when you buy Apple stock, you kind of think that they are going to return this for the next 33 years. That's basically what you're saying when you put your money into that. At least that's my translation, right? And then you on this other side, and this is also, of course, because of the FASB ruling, right? You can have the true value of the Bitcoin on your balance sheet, so you can. And we'll see the market reaction when Strategy is going to have their earnings call in, what is it, 2 weeks. You can actually report the increased value of the Bitcoin as revenue. At least that's what they're going to do, right?
Yeah.
And so I think that'll be
straight to the bottom line, basically.
Yeah, exactly. Earnings, yes. Yeah. So that is the term. So it's going to be interesting how the market reacts.
And in theory, if the market reacts significantly to it, then analysts on Wall Street have been not doing their job right. I mean, They should be have accounted for this already, and yet they may not have. Like we could see a series of quarterly earnings reports from Strategy that deliver big sticker numbers of gains as Bitcoin's price goes up, and Strategy could do really well as a stock as a result of that, despite the fact that analysts should have already baked that in. They know this is coming. This should already be folded into the valuation of Strategy, and yet the efficient market hypothesis is wrong. So
yes, exactly.
we may see quite an effect from it.
Yes. Well, this ties into, the Yuppie elite don't understand, they dismiss Bitcoin. We'll get to that also later, but that's actually a good point to add, right? Because not everyone understands Bitcoin. A lot of people still hate Bitcoin. I had a recent episode where we talked about the whole perception in the media, which is also really interesting, right? So a lot of people don't understand Bitcoin. Now you're coming, we have Bitcoin, what is it? Bitcoin yield per share. We have the metric that you just mentioned. So I understand this is a new thing. People are engineering this in a way. They're pioneering this in a way. But when people buy Bitcoin Treasury Company shares, what are they actually buying? You just mentioned, Bitcoin per share increases. You got more Bitcoin per share over time, is what you just said. But I obviously don't really own it. So what does it say? Like, what does the Bitcoin yield per share actually say about the ability of the company to acquire Bitcoin? I've also heard these terms of torque, right? Like how fast you can do it. You have this months to close time to close the MNAV. So I think there's a few indicators that can help you to judge if a company is actually good at how they are engineering it. Is that how to look at it, or do you have a different view?
No, yeah, I think that's right. I think it's really exciting because this is the very beginning of what I think will be the most valuable industry in the world. 10 years from now, maybe 20 years from now. Bitcoin Treasury Companies, and that specifically means companies who have an explicit mandate to deliver Bitcoin yield to shareholders. And that's any company, any public company that decides to say, like, this is what we care about. This is what our KPI that you should measure us by, and this is what we're going to try to do is, grow our Bitcoin holdings per share. And yeah, it's like a brand new industry, and that means brand new analysis for what matters here, which is part of why we put out the P-bid ratio as a bit of an evolution on days to cover, which has some benefits to it and puts it in an analogous time scale, unit scale to PE ratios, so you can directly compare across to traditional equities. But yeah, I mean, it demands to be understood and analyzed and better developed in terms of like what matters for a Bitcoin Treasury company. And we're seeing experimentation, ideas about what matters being implemented, and some are doing better than others. I'm a believer that, obviously Strategy pioneered this, and then I think, what was big for me was seeing that Metaplanet could do it from nothing in Japan, and has been able to grow into a place where they have a strong community, a really strong distributed investor base, and they have incrementally improved their capital market tools for raising capital and buying more Bitcoin. And now they're in a clear leadership position in Japan. I think they have just about locked up, the winning position there in Japan, and nobody's going to be able to take that from them. So we're going to see that in every capital market all over the world. Every country is going to have its Metaplanet, I think, and right now is when that is all taking shape. And so I'm super excited about what we're doing with Smarter Web in the UK, and I feel like we've we've gotten a great head start as the in the leadership position in the UK, a 10x lead over the next closest Bitcoin Treasury company in the UK in terms of Bitcoin held and market cap. And we're developing the investor base, the community that you need, that Metaplanet has shown is essential to success in this model of doing like a pure play, grow from nothing Bitcoin Treasury company in a specific capital market. And so I think that's really the winning approach, and one that we're trying to follow closely. And I think there are ways to do it wrong too. And I think, for example, in the U.S., there have been a few companies that have made a splash by coming out of nowhere and then buying a bunch of Bitcoin and saying that and they're a Bitcoin Treasury company. But to me, it's like, well, what are you going to do next? Like, where are you going to get the flywheel going to show you have a track record of delivering Bitcoin yield such that you can justify a high MNAV, and then you can keep running the same playbook because you have the high MNAV. And so I think, right there, there's two different models of like start small and grow and build a track record versus come in big, have a bunch of Bitcoin, but then what? And we're going to see which version ends up being more successful. It's basically, it's such a new industry. This is all like just taking shape now.
Yeah. Okay. I really love being the contrarian for once.
Let's go.
Okay. So basically we just said MNAV should be an efficient market valuation of the ability of a company to acquire Bitcoin in, I don't know if the fastest way possible is the best, in the most efficient way possible. Let's call it that, right? So I think there already is, I think that's kind of shaky in a sense that there's quite some technical jargon to get around and understanding different products, markets, etc. To also, as an investor, have an efficient do an efficient due diligence on the stock. But okay, that is probably with everything. I mean, who's really looking at Apple's manufacturing supply lines and all that stuff. Like that's also a small amount of people, right? So okay, to be fair. But you just said community twice. That's my red alert, red flag, itchy crypto word. So yes. I'll double click on that. I agree. This is very new, right? This is very new. This is when I discovered Ethereum at like $7 or $17. I thought, okay, this is fun. I'm going to check this out. This is a super wild west. I did all the nonsense in crypto, all the ICOs, NFTs before realizing I had the shitcoin before I truly Bitcoin. So here I am. But I always had the thought, okay, this is a wild west. Everything new, every new thing digitally or financially is usually a wild west, right? And that's okay. That's all part of it. I think that should be acknowledged in general, but using the word community as kind of like creating an edge, honestly, gives me the ick, right? So some people say Bitcoin Treasury companies could be this cycle's if there's any cycle, different discussion, but this cycle's ICOs. What is your take on that comparison? And maybe more important, what distinguishes real companies for people that are hype or they see money? I agree with you, right? If you raise 500 or 700 million and you buy X amount of Bitcoin, how are you going to top that, right? Like how are you going to create that torque, that speed, and differentiate yourself? So that is true on the one side. On the other side, we do see Pompliano's thing or 21 CEP, right? Like they go up. People are chasing money, right? So this is true fiat money mindset. You cannot disagree with that. Yeah, I think so. True. I feel like there's this blob of money that is chasing the next opportunity, which again is always happening. But I think because Bitcoin is intertwined with this is where I start to see kind of the risk to Bitcoin itself, the image of Bitcoin, and this mix of this fiat money. Well, I'm going to call it a gamble mindset and just, being a diligent, prudent, cold storage stacking Bitcoiner.
Yeah.
So yeah, that's my question slash.
Yeah, there's a ton we need to unpack in here. I guess I'll just start with top of mind here. If like, it is interesting how like with Pomp, some of their marketing materials is like advertising how low their MNAV is, and it's like, look, you're paying like a lower premium than you would be for Metaplanet or whatever, and to me that doesn't make any sense, because I think that's the market pricing in that they're going to have a tough time delivering meaningful Bitcoin yield.
Yes, I agree.
So like like that, just right there, it's like you need to not think about just MNAV, but also think about MNAV alongside and directly linked to Bitcoin yield, to balance those two out. And you're right, there's a lot of money chasing here, and there are going to be some heartaches big time in Bitcoin Treasury companies. It is the newest frontier, and there's going to be a lot of ways to do it wrong. and like in the UK, there's probably 25 companies that are now pursuing a Bitcoin Treasury strategy, and like 5, maybe 10 have bought any Bitcoin. Right, so it's like, what are the other ones doing? Are they genuinely doing this and they're just stuck with regulatory stuff or fundraising, or are they trying to get a boost to their stock price because they're claiming to do the current hot thing? Just one example there. There's also like there are ways to shortcut to scale, right? Like you can raise a bunch of money in ways that give institutional investors steep discounts. And it's kind of a lot like early insiders in an ICO or the latest altcoin, and then boom, it comes to market and they're going to sell because they're suddenly 10x or more up, and they're going to make a quick buck, and then retail ends up being exit liquidity in those cases. So it's like that's like fiat shitcoin insider stuff being ported over into Bitcoin Treasury companies, and a lot of people are going to get burned that way. So I think I think part of it is Bitcoiners have all this pattern recognition of like, it's too good to be true. We've seen ICOs, we've seen altcoins, we've been around too many cycles to fall for this, right? But they're and they're partly right, because there are companies that are going to use the same like ICO playbook to try to shortcut. But there's also strategy, and there's also Metaplanet, and there's also Smarter Web, where if you're doing it in a pure way without these shortcuts, it can be very attractive and very successful for shareholders. And I think the key distinction there is that with ICOs, with altcoins, you're trying to use community, right, to grow like a meaningful, lasting
narrative
that turns into something real, right? Like you're trying to
possibly
create this yeah, you're trying to do alchemy of like turning a community into like meaningful economy, right?
Well, in crypto, they really need I've talked about this in length before, but I think in crypto, it's like my token derives value from the possible future use of said token in this platform or economy that I'm going to build.
Yes, right. And so there's that narrative, that approach of like trying to hype up a community and hope that it turns into real economic utility. As opposed to with a Bitcoin Treasury company like Metaplanet or Smarter Web or Strategy, you're trying to energize an investor base to say, look, like our mandate from you is to increase Bitcoin per share, and we're not trying to like materialize some hype narrative into economic activity like with an altcoin. We're just trying to stack Bitcoin. So it's, the fundamentals couldn't be more sound at the end of the day. Like, the whole point is to accumulate Bitcoin in the treasury because it's the best asset in the world. So even though it looks, there's a lot of pattern recognition of like, wait, why is this like, what are these community driven Bitcoin Treasury Company plays? And it feels a lot, there's a lot of overlap with how that looked with altcoins, but the fundamentals at the very base layer are, we're trying to accumulate Bitcoin for the benefit of shareholders, specifically because Bitcoin's the best asset, and we want nothing to do with like trying to create our own coin and turn that into a thing. We just want to add Bitcoin per share.
Yeah. If you want to self-custody your Bitcoin stack, I recommend the Blockstream Jade Plus. I've been using this premium Bitcoin-only hardware wallet for a few months now, and I love its design and ease of use. What makes it stand out is its open source hardware and software, and Blockstream's unique genuine check, which makes sure that your device is authentic. No backdoors or compromises. You can connect with the Jade Plus however you want: Bluetooth, USB-C, or you can go fully air-gapped with its built-in camera for cable-free QR transactions. The metal case feels solid and the color screen is easy to read, and it connects with your favorite Bitcoin apps like Blockstream Green, Sparrow, and Electrum. Get your Jade Plus today at store.blockstream.com and use code BRAM to get 10% of your entire order. Let's talk about something that not a lot of people think about before it's too late. Where are you storing your Bitcoin seed words? Are they truly secure? I found my solution with StampSeed. It's an elegant all-in-one titanium plate solution with no separate pieces to lose or manage. Your seed phrase gets permanently stamped into pure titanium that withstands fire, survives water, and lasts for generations. Unlike shallow etching methods, StampSeed's patented tools help you to deeply stamp every letter for permanent readability, protecting your financial legacy. When you order a titanium seed plate from StampSeed, you can also upload a custom design or your logo to customize the back of your plate to make it fully personalized. Paper seed phrases are a disaster waiting to happen. Secure your Bitcoin with StampSeed for decades to come. Visit stampseed.com and use code BRAM, that's BRAM, to get 15% off your order. Yes, I agree. I'm following along, but then again, there's a small percentage of people that understands Bitcoin. Therefore, there's even a smaller percentage of people that truly understand, what this opportunity is, because that is what I do see and what I would, credit Saylor for in terms of explaining, okay, what are we doing here? I mean, the fact that you can borrow at a 0% interest rate, the broken money that is.
Yeah. Let's pause on that. It's like, This is what every individual would love to do, right? Like, I would love, as an individual, I would love to go out and get a 0% interest rate
and buy
loan that I pay back 5 years from now, over a cycle from now. Because I know that Bitcoin will appreciate and that fiat obligation will depreciate in value, in purchasing power. But I can't do that, because the best I can do is go out and get a personal loan for, I don't know, 15% or something, and sign over my life and all these other strings attached, and it wouldn't even be for that much. So I can't do it as an individual, but a corporation can. And so what shareholders are really doing is they're saying, okay, you corporation, you can do this, and I want to participate in it.
Yeah. So this is, I think, the number one thing why I do like it is I just love that idea, right? Like, that is using traditional, just TradFi rails, TradFi constructs, right? You see also with, we'll dive into the different products also later, but like, the products that Strategy is offering, etc. Like, it's all tailored to the fiat-minded, capital allocators of the world, which, that concept I absolutely love, right? So we're using their own game and we're turning this broken money that's, assured to be debased into perpetuity, and we're buying, absolute scarce money with it. So, I mean, I'm on that boat, right? Like, I think that is entertaining to the max, right? If we can do that. So I agree. And as an individual, it's different. But if a small percentage of people, understand Bitcoin, and smaller even, like what is actually happening here, does it make sense there's only just there's a winner per country or in a certain industry, or you just mentioned community, but we can think about it. There's a certain strategy or brand or a regulatory approach, right? There's all these different things that could add to this competitive landscape. What is your view on that? You probably also know, but there are many people talking about doing more stuff in France, Germany, England. I'm hearing, Norway even. So what are your thoughts on that? Because if everyone wants to do it, this just becomes, maybe more the marketing community type thing, which I don't like, rather than, it's funny I'm saying this, but structural fundamental analysis as to who's doing it the best, right? Which is a utopia, probably what I'm just saying now. But, I think that is honestly where the risk for Bitcoin itself kind of starts, because then it becomes this less serious thing than what we just mentioned. Is okay, we have an opportunity to use TradFi rails to turn this bad money into Bitcoin, which is absolutely brilliant.
Yeah, we're it is the frontier. We're going to see what ends up playing out. We're going to see what ends up working best. I've I guess a somewhat loosely held belief that this will be winner take most in each capital market. And so if we zoom out to kind of where I think this is going, I think that in each capital market, you're going to see a leadership Bitcoin Treasury company that really resonates with that capital market. That partly means resonating with retail investors in that nation. Maybe it's a very authentic story, or led by a high integrity individual who's from that country and people trust. That plays in. That's certainly what we're seeing in Smarter Web. It really resonates. But you also need to resonate with institutions, right? And be able to raise capital in that world. Somebody's going to grow a big enough Bitcoin balance sheet, I think, in each capital market to then eventually launch their own preferred equities the way that Strategy has in the US. And then you're tapping into I think that Bitcoin Treasury companies are in their early stages of maturation, tapping into the equity markets and the fact that you're not getting value with the high PE ratios in equity markets. And people are seeking value, and Bitcoiners see the value proposition of Bitcoin yield. And so they're reallocating their capital from the equities they hold in their portfolios into Bitcoin Treasury companies, and that's fueling the growth of those companies. So you're tapping into the equity pool of capital. And then that helps you grow. And then later on, I think you transition, as we're seeing Strategy do, and Metaplan's starting to hint at also. You transition into preferred equities, which is really repackaging debt offerings that are designed to appeal to bond market capital, to fixed income capital. And there's a ton of that. There's over 300 trillion of that in the world. And it's all getting mid-single digit risk-adjusted returns. And then Strategy comes along and says, because we're going to buy Bitcoin with it and it's going to grow at 29% a year, we're willing to give you 10%. And look how over collateralized our balance sheet is. You're going to get your money because our balance sheet is incredible. Risk adjusted, this is not very risky at all. And we're offering you 10%. And bond market capital will increasingly say yes to that because it's the best place to get risk-adjusted returns if you're a fixed income investor or portfolio manager in most cases. And that's where I see the end state of this everywhere. In every capital market, you're going to have a Bitcoin Treasury company that gets to a large enough balance sheet that they can offer these preferred equity instruments and then tap into the bond market in that capital market. And now you're you're draining, you're really siphoning, you're pumping the capital out of these overvalued buckets of TradFi, equities, and bonds, and you're pumping it into Bitcoin. So these Bitcoin Treasury Companies are going to be the capital pumps to accelerate the osmotic flow that would have happened anyway, but slowly. You're going to accelerate the flow of capital into Bitcoin. And in that way, Bitcoin Treasury Companies are going to be the biggest bidders, I think, for Bitcoin over the next 20 years, because they are going to be the conduit through which TradFi capital gets access to Bitcoin.
Thinking Bitcoin is captured by TradFi, etc., I don't really subscribe to. I think this was inevitable like just, TradFi figuring this out, I think is more a signal that it actually has value and it has a future. So I disagree with that. I think Bitcoin forces you to adhere to its rules. Basically, you can play all the stupid fiat games, right? I think we fully agree on that, both.
I think you could think of it as, I think Bitcoin Treasury Companies are possibly a Trojan horse, possibly more like the way in which TradFi bends a knee to Bitcoin. It's like, if I'm bond market capital, I can't get 10% anywhere except if I, bend the knee to Bitcoin.
Yeah, so I fully agree with this. People won't like you saying Trojan horse again, but I agree with Trojan horse. It is proving that Bitcoin is the best asset to allocate your capital to, period.
Yes.
And I think by having this sly roundabout way, we are actually tricking them into investing in Bitcoin, which in my perception makes Bitcoin more and more important, more and more legitimized as a financial asset. And therefore, we are kind of partially securing its prosperity towards the future, right? Like it's so I agree with that. So I had a tweet. I think Bitcoin Treasury companies that truly understand Bitcoin will be a force of nature in finance. These are the new Wall Street top companies in 10 years, right? 2035. If we want Bitcoin to exist forever, it should dominate Wall Street. And I think this is how it's done. So again, right, like I agree with that. I added to that, plus you should never stop talking about Bitcoin either, right? Because I think we all want mostly the plebs to own this. That's the whole point. But I think the people you don't like adopting Bitcoin is the whole point of Bitcoin. So why not do it in a way that they are probably mainly driven by greed, and then at the same time, kind of securing Bitcoin's future. So I do agree with that idea.
Bram, it kind of sounds like you're bullish on Bitcoin Treasury Companies. What's going on here?
Conceptually, the thesis, no, I like it. I think it's a sly roundabout way, but again, I think the risk to Bitcoin because of the inevitable fuckery that's going to happen, I don't
You're
like.
concerned, yeah.
I don't like because it's going to happen, and so yes. I don't. I think it's difficult, especially, and I think these questions are tied into that. I think that if you are not a true believer in Bitcoin, you should not do a Bitcoin treasury company. Like it's either this, or you go fully all in 100%, or you just don't, right? I think there are currently some companies where I think the leaders are showing that they're not real Bitcoiners, which I don't think it's really a concern. I just think there's going to be more of those people. And then I think it would be a bigger concern for me. So maybe two short questions before we go on to more like the structuring, what are like the products and stuff. Do you think a profitable core business, even if it's small, does that impact the sustainability or the legitimacy of a Bitcoin treasury?
Yeah, I think ideally you have a little bit of a profitable operating business. I do understand the counterpoint of like you don't want it to be a distraction from your Bitcoin treasury focus. You can sort of imagine like Apple is not going to become a high conviction Bitcoin treasury company that's fully focused on driving Bitcoin per share, because they've got a cash cow business that they're running, and they have to remain focused on that. I think it doesn't matter that much it may matter in a bear market, right? Like having a profitable enough operating business that you can, pay the bills, is preferable to not having that in a bear market.
Maybe you know this, but I wanted to get back to that actually, because you said, strategy is very over collateralized. I see a lot of very bad takes about, if Bitcoin goes to 80,000, they have to settle it all, blah, blah. I think the actual number is like 14 or 18,000 or something, which I don't think is going to happen. A lot of these other companies are, like Mag 7. I was trying to find the numbers, but I don't have them. But they have way different ratios, right? Like worse than strategy in that sense. So they have higher PE ratios. They get higher valuation for what you could argue their business is actually worth, right? Because you're projecting very far into the future. For example, with this Apple example. But also they are in a worse shape in the sense of how they're financed, right? Well, next to that, Apple of course has all this cash, but I find that interesting. Maybe that's for later, but like just putting those numbers together, I wonder if the Bloomberg people are gonna have like a proper analysis of strategy, and also compared to Mag 7, of course, like after this. After the earnings call. So when we talk about the MNAV, right, what do you think happens, maybe practically and psychologically? I think the latter is even more important. If a treasury company's MNAV drops below 1, if that follows, I would say your definition of that would be the indicator as to how well they're executing their strategy.
Yeah, that will be an interesting time. I do sort of imagine that, what's that classic Warren Buffett quote of like, when the tide goes out, you see who's been swimming naked.
Yeah.
We're gonna, like, I don't know when the next bear market happens, and I don't know how big it is. Saylor's kind of the opinion that, like, that they will be limited to much softer bear markets going forward because of the bid from Bitcoin Treasury Companies. Maybe, hopefully, that'd be great. But people are going to get out over their skis in some way, right? And then they will have to wash out the like excess that happens, and we'll see how people screw it up. Obviously, taking on too much debt is probably the number one way that you could screw it up, and put yourself into a distress situation. So to trade under a 1x MNAV, the market, I think, has to be pricing in some sort of distress for the company. And then what do you do if you're that Bitcoin Treasury company in that situation? I don't really know. I think you may want to try to get acquired by a Bitcoin Treasury company in a better situation where you're basically willing to take sell if you're trading at a 0.9 MNAV, maybe you find a buyer for 0.95, and that's how you do right by your shareholders. There are probably other things you can do. You could take on, if you happen to not have much debt on your balance sheet, it could be a very attractive time to take on, lever up to take on fiat debt for up to 25% maybe of your net asset value, and then use the proceeds to buy Bitcoin, and now you're generating Bitcoin yield again, and maybe that kind of momentum helps get you back above a 1x MNAV. There are going to be other, you could sell covered calls or other options, other derivatives, and we're going to see what is like the right way to approach that when you get into that kind of circumstance. The other option, I suppose, is just wait, right? Like you could, if you're an operating business that is profitable, and you end up in a sub 1x MNAV in a bear market, well, one thing you could do is just wait 6 months and keep the operating business going and see how things look 6 months later.
So when we talk about the products that these companies are engineering. We're seeing different Bitcoin wrappers emerge, right? So we have strategy, perpetual preferred stock. Metaplanet is targeting, Japanese regulatory and yield appetites. How do you view the evolution of these debt and equity structures? And do you think there are companies that are actually like driving innovation across jurisdictions, or are people just copycatting? What are your views on that?
Yeah, well, the real innovation is basically coming from strategy, and I think a little bit from Metaplanet. Those are really the two that have kind of set the bar of like what's possible, especially with strategy's new innovation around preferred equities. I'm very bullish on that. I think it's pretty genius what Saylor's come up with there. These have never been done before. And he used AI to help like figure out how it was possible to do this. I think reading between the lines a bit, I think they were issuing convertible debt for quite some time, years, and I think Saylor was frustrated with the sort of covenants, the debt covenants that are put in place, and the power that debt holders have over a business whenever you take on those debt holders. And I think he was like, screw this, let's figure out how to turn this, take this fundraising and put it instead in the equity bucket where the company has a lot more power. And it's a lot more flexible too, and offers a lot less friction for additional fundraising, because you can sell out the market on the day, like whenever market conditions are ripe for issuing more of it, you can do it immediately right into the market, versus like convertible notes. If you're doing a discrete individual convertible notes, it's a whole like multi-month process to take that to market and fundraise and close and then get the proceeds. So strategy has been the real innovator so far, because they have a huge head start, and Saylor's a badass. Metaplanet has been innovating in terms of like, I guess, sort of discovering or blazing the trail of like, here's how you can do it from nothing, like starting from a $10 million market cap company rather than starting from a $1 billion market cap. And I think that's Metaplanet's success has been the reason why all of a sudden there's a bunch of people doing the same in other capital markets, because until Metaplanet did it, we didn't know that you could start from nothing and succeed as a Bitcoin treasury company. And now we know that it's possible. And again, there's lots of other shortcuts that people could take to try to grow to scale. And my sense is that a lot of those are not going to work. I think a big part of what you need is a really clean balance sheet, and to not introduce any headwinds to future growth, to future Bitcoin yield delivery. And Metaplanet, has done a great job of staying clean, having a really lightweight balance sheet. Like they have like almost no debt. And they've done a great job of whenever they take on debt, they retire it at an opportune moment. And so, we're going to see a lot of the ways in which getting out over your skis can come back to bite you, or can, at the least, create a headwind for generating that flywheel effect that you need in order to keep growing. And so, there's experimentation that's going to happen from the late entrants, but the real innovation has been coming from Saylor and from Metaplanet.
So I think one of the arguments I saw or heard is like there are many capital allocators that cannot buy spot Bitcoin. So these products that, for example, Strategy is creating, they are ways for these people to actually get exposure to Bitcoin. Again, I think you should understand Bitcoin to understand what that means, right? So I mean, I wonder how many professional allocators that understand Bitcoin, but let's go along with the argument. If Bitcoin gets more adopted, right, or maybe even a step before that, like that limiting factor for large institutions that want direct Bitcoin exposure, and that treasury companies now kind of like help bridge the gap. Do you think that will continue also when, we now see in the US, for example, these rules changing for custody of Bitcoin by banks, etc.? I can imagine that further legitimization of Bitcoin as a new financial asset, this digital commodity, could eventually lead to these capital allocators actually being able to buy spot Bitcoin. How do you look at that?
Yeah, it's really cool how, like, for example, Smarter Web in the UK, the FCA in the UK, the equivalent of the SEC, has not allowed a Bitcoin ETF in the UK, and so they've been preventing investors from accessing Bitcoin. Much to the dismay and to the unfortunate detriment of investors, and that certainly has provided some amount of a tailwind for Smarter Web, in terms of there's like £2 trillion of retirement account capital in the UK that currently can't access Bitcoin, but they can invest in Bitcoin Treasury Companies. And because of that, and because of the success that Smarter Web has seen, the FCA is now starting to, they're going to allow Bitcoin ETFs. And, the timing of it is perhaps a coincidence, but perhaps it's that Bitcoin Treasury Companies are kind of forcing regulators to say, okay, well, investors are getting access to Bitcoin in this other way, but it doesn't track as cleanly with Bitcoin. So maybe we should just allow a Bitcoin ETF. And so in that way, like, Bitcoin Treasury Companies are kind of forcing the hand, possibly, of regulators to allow greater access to Bitcoin. And we think that's great, because the other thing about it is we at Smarter Web, we don't think that an ETF is our competition. We understand we're probably benefiting from the lack of ETFs, but our view is that really the value proposition of a Bitcoin Treasury Company is you take some risk. You're investing in this model of Bitcoin yield generation, and an ETF doesn't do that. It of course cleanly tracks Bitcoin itself, and a Bitcoin Treasury Company does not. There's volatility that's layered on top of it, MNAV compression and expansion, that means it doesn't actually track cleanly with Bitcoin's price. So it's very interesting how Bitcoin Treasury Companies, I think, are forcing the hands of regulators to increase access to Bitcoin, and that's a great thing. And Bitcoin Treasury Companies aren't actually competing with Bitcoin itself. It's about offering the one thing that Bitcoin doesn't do, which is provide a yield. So, using capital market tools to facilitate the flow of TradFi capital into Bitcoin and generate a Bitcoin yield for investors, that's really the value proposition that I see.
Second word after community is yield.
Yes.
But right, so the classic, where does the yield come from?
Yeah,
I think here is a bit different. I mean, I can get to the definition of Bitcoin yield, although you obviously don't really hold it. But I won't be as annoying as that. But I think it's a bit more clear where the yield. So it's not yield on Bitcoin; it's Bitcoin yield, right? Maybe that's a good.
I wish there were two different words here. You're right.
Okay. Yeah. So it is Bitcoin yield in Bitcoin on your fiat money stock.
Bitcoin growth, right? Yeah.
Exactly. Okay. So. So again, it's that, right? So again, just for me to understand, and also for people that are at my level of understanding, the whole goal of investing in a Bitcoin treasury company is, how good are they at engineering certain products to appeal to different types of capital markets, capital allocators, in order to get funds to buy Bitcoin in the most efficient way possible,
yes.
right? And the representation metric of that conceptually is the MNAV, right?
Yeah.
And I don't necessarily agree with this myself, but I think it's an interesting argument in general. Like, I mean, we like it when, Bitcoin is more solidified, the chance of survival goes up and all these things. But it's not really productive in a sense. I've seen people say that, right? Like, these companies are not necessarily productive. And I think that ties into a question I want to ask you. Like, are they an operating company? Is MicroStrategy an operating company? Or, and I think that's an interesting thing to get your take on. Could, they are on this edge of perhaps S&P 500 inclusion, which could be very interesting. I think that will all that debate will kick off more after their earnings call with these huge numbers, right? But I saw an argument that I think is quite legit, but I wonder what you think is, well, if they don't, if their operating business is so tiny compared to, what they're making with this whole Bitcoin treasury strategy, that they could become more like an open-ended fund type company, which, the commission at the S&P 500 could say, like, okay, well, that is not something for the S&P 500. Like, I find these things interesting.
Yeah. A few things there of like, when you revisited the word community, it sort of struck me of like, what we're really, community is maybe a bad word, because what we really care about with Bitcoin Treasury Company is like investor base as a barometer for your reach in a capital market jurisdiction. Like, we've got 4,000 people on the Smarter Web Twitter group, and that's the third largest Bitcoin Treasury Company group on Twitter. But really, it's like an indicator of how resonant it is with retail investors in the UK. So again, I guess semantics here, like the word choices are, I think, throwing red flags for a lot of seasoned Bitcoiners, right? Like when you hear community, and then when you hear yield, right? Like, you gave a great definition of what Bitcoin yield here means. And we should foil that against what it meant for like BlockFi and Celsius and, that whole debacle last cycle. What was happening there was people were lending Bitcoin to higher and higher risk taking borrowers who were willing to pay more and more interest, higher and higher interest rates, because what they were doing was crazy risky, and eventually that's going to blow up. Right. And so,
yeah, without telling anyone, basically, right?
Exactly.
So you should add that. Yeah.
Yeah. So, retail investors, I guess, were depositing their Bitcoin on BlockFi and being promised 6% yield, while BlockFi was taking that Bitcoin and lending it out to high risk taking investment funds, and in some cases they were then packaging it up and lending it to even higher risk taking investment funds. So that was a house of cards that was bound to fall, as opposed to trying to generate your yield by facilitating the flow of TradFi capital from overvalued buckets into Bitcoin.
Yes.
And generating that Bitcoin growth per share in the process.
Yeah.
So it is like, I think the reflexive objection that I guess the majority of Bitcoiners still feel towards Bitcoin Treasury Companies is because of all those war wounds from prior cycles of like community being a red flag and yield being a red flag, but of course, it's a problem to say this time is different. And again, like, I agree that some Bitcoin Treasury Companies are going to screw it up colossally, and it's going to be the late entrants who do it in the shitty way, right? Like, that's how it's going to go.
Usually,
but like, the fundamentals that strategy has put in place and Metaplanet, and we think at Smarter Web we're doing, are pretty beautiful. It's like it is just accumulating Bitcoin by arbitraging TradFi.
I think it's a good addition to what we previously talked about, is siphoning money away from overvalued assets of which their valuations do not necessarily reflect their actual value, right? So I think that is something that I fully agree with. So again, that's why I find it interesting. And just interesting to follow in general. Again, and for the people listening, Jesse and I know each other. I know I can say this to you.
Yeah.
Using the argument for like, oh, we have 4,000 people in a group.
It feels just
as red alert. Sorry, dude. Like that's red alert. I personally don't like that. Well, okay. So I just want to say that, like, I think it's more. I don't want to say warning, but I think there could be a great argumentation of, about this, siphoning from overvalued other assets. Fully agree. I mean, you're known for, this image with the blocks, like what is the potential of Bitcoin? Like, I mean, I'm 100% aligned with that. I think that is also, if more people would understand that, in general, Bitcoin would grow, but then understanding, okay, I can take some risk by investing in companies that are actually accelerating this. Again, this is my pitch. I would follow that, right? But then kind of like falling into softer, weaker argumentation with community and stuff, I think it takes away from the actual financial opportunity that you could be talking about. And I also agree that many people don't understand that, but maybe that is the challenge here, also to differentiate yourself, whatever type of treasury company.
Yeah. I mean, great point and well taken. I think this is part of like what we're still trying to figure out. Like I'm counting myself as a speaking for the Bitcoin Treasury Company industry here. Those of us
I want to see
those of us who think there's a ton of opportunity here and a ton of value here are still trying to figure out how to articulate it. And that's why Saylor likes using that slide of mine. And he's been using it for a couple of years, and it took me until like 6 months ago to realize why he has been using it. And it's because that visualization shows you how big those capital pools are for tapping to help flow that capital into Bitcoin. So that's why he uses that to set the stage, I think, in his presentations. And you're right. It's like what matters here is helping to tap into, finding a way to use capital markets to tap into capital that's in the equity market and in the bond market, and use Bitcoin's properties to meet that capital where it's at and say, look, there's better value here. Are you interested in this value proposition? Are you interested in these products that we've created for you? Mm-hmm. In bond market case, that's the 10% proposition. That's what matters. And then these other things that I possibly talk about too much, of community, of the 4,000 people in the Twitter group, they're like health metrics, I guess. It's like, what's your, I don't know, what's your cholesterol or something like that. Like,
again, I don't disagree with that, because the bar to join a group on X is very low. But yeah, I'll leave it here.
Yeah, right. So true. And it's all relative. These are really kind of afterthoughts of like, well, it seems to be resonating with people more than, and you can sort of stack rank which companies have the bigger communities. But you're right, it doesn't matter compared to the thing that really, really matters, which is like, this is how we're reaching new capital pools to buy more Bitcoin.
Yeah. Well, and that disruptive part I really like, because in general, I think it's necessary. And we both agree, as we talked about at length before, that, Bitcoin is the prime asset, prime financial asset in the world. And so I think we agree there. I thought you just mentioned something interesting about, in the UK, kind of like forcing / inspiring perhaps regulators to actually allow native Bitcoin ETFs. before they perhaps also allow foreign ETFs. What are your thoughts on having a similar effect on big public companies allocating serious treasury reserves in Bitcoin? Do you think there's like a reputational barrier, perhaps psychological barrier? I'm personally still amazed by the fact that Michael Dell has not publicly announced that he's into Bitcoin. I mean, I remember, I think 18 months ago or something, when he was tweeting like the Bitcoin cookie monster. I told him, like, you should go all in on Bitcoin. You should make cheap nodes, right? And I would buy one. Like that would be legacy building for that company, in my opinion. Like he could have a Bitcoin Treasury Company. He's one of the richest people, I think number 7 or 8 in the world. That would be a huge splash in general. He's a full-on Bitcoiner. And then make Bitcoin hardware. Like, dude, so logical for me. He's still not talking about it more, so I'm quite surprised by that. But yeah, what are your thoughts on, big public tech companies, or just in general big public companies going towards Bitcoin?
I have a slightly contrarian, perhaps, maybe it's just not super consensus take on that. And it's funny too, because the Dell scenario has been very interesting to me, because I used to do some work for Dell, and so I've been on the inside and seen how decision making goes. Like one of my first bits of work out of college was helping them rationalize their server SKUs, like figuring out which ones to cut, and as part of a management consulting project. Anyway, so I've seen decision making there, and I never got into a room with Michael Dell. That was like well above what I was doing, but it's a juggernaut there. I think it all comes back to what we were talking about before, of like, if you have a profitable cash flowing business, you're disinclined to change it, or to take the sort of perceived risk of changing it by putting it all in Bitcoin, or changing the products you make to include Bitcoin. And so I think that causes serious hesitation from somebody like Michael Dell. Like, I have no idea. Maybe he holds a bunch of Bitcoin and like truly believes. Maybe he has like a 1% allocation to it. Maybe he was interested and never bought any. That's also possible. But he's probably not going to bet his life's work on Bitcoin because he doesn't need to. Like, as opposed to Saylor, where like he has said, like, we were a zombie company, and we knew that our strongest asset was our cash treasury, but we had this problem of it melting in purchasing power, and we had to figure that out. So they had a burning platform that they needed to make a change, otherwise the company was going to die after a while. As opposed to Dell, they're a cash flowing business. They're a cash cow, really. And you're disinclined to rock the boat. So I think that corporate adoption of Bitcoin will come from companies like we've seen, ones that are zombie companies or have nothing to lose. They need something to change in order to remain a going concern. Those are going to be the ones that adopt Bitcoin first, and then the cash cows, the ones that are profitable and don't need to change anything, are going to be the last to adopt it. Like, I think everybody's waiting for Microsoft and Apple to buy Bitcoin, and they're going to be some of the last companies in the world to meaningfully adopt Bitcoin as a treasury asset. But that's okay. Like, it just means that individuals and companies that are willing to take that risk have a big opportunity to like get a leg up on the Magnificent Seven by acting sooner.
Yeah, I also think that is something interesting, right? Like the whole idea of Mag 7. That's also why I'm interested in to see if MicroStrategy would be allowed, or strategy would be allowed in the S&P 500. Is there's not really much changing in this top 7, 10, 15, 20 even.
Yeah, I think that it's unassailable that a company just happens to prefer Bitcoin as its treasury asset. The Bitcoin Treasury Company playbook is really about taking any company and strengthening its balance sheet. So like the core DNA of the company remains an operating business. It remains a business. It's not an investment fund. It just happens to have a really strong balance sheet because it's chosen Bitcoin instead of holding dollars or pounds or whatever. You could hold gold as your treasury asset, but people don't. Bitcoin's just a better treasury asset. If strategy was going to be excluded from consideration in the S&P 500, that would be criminal in my book of like a prejudicial targeting, because the powers that be don't want to allow Bitcoin to be used as a treasury asset, like because they want to force people to hold fiat, to hold dollars instead. It's not strategy's fault that they print 7% more dollars every year, and that has driven strategy to choose a hard capped supply treasury asset instead. That doesn't make them an investment fund. That just means that they have opted out of that monetary inflation. So I think there will probably be some kind of fight on this point, but I think so long as rule of law holds, you can't say that strategy or any Bitcoin treasury company is an investment fund. They're just a business that happens to have a really good treasury asset as its primary asset on its balance sheet.
Few things to add. I just asked Grok from the Mag 7 in the S&P 500 how much percentage of the allocation goes to those companies from all the inflow. Of course, there's there's different inflow into the S&P 500. So I said, okay, from passive inflows, how much percentage? Give me one number. 33, which is kind of wild.
Yeah, wow.
So the Mag 7 gets 33% of passive inflows. With the allocation of that capital.
And let's talk about what that really means, right? Like that's everyone in America plowing into their 401k, just pointing it towards the S&P 500 index. Yeah. And they're saving in equities because that's the best saving vehicle that mainstream
proposed.
Yeah. Like and that's specifically because you can't save in the currency because they're debasing it so quickly. So people have learned what you can save in is real estate and the stock market. So just pay, be willing to pay that 33 PE ratio because it doesn't matter. Everyone is doing it, right? Like that's what we've gotten into.
And then they're typing on their Android or their Apple phone that they hate big tech. Right.
Yeah. Right. and then along come Bitcoin treasury companies that, if you believe the PE to PBID comparison as a fair enough apples to apples comparison, well, these Bitcoin treasury companies are extremely undervalued compared to the PE ratios that people are willing to pay.
Yeah.
Because they're just saving their money. They're just saving their 401k in indices. And that's plowing it in the Mag 7 at crazy PE ratios.
Well, making that bigger, they are contributing to the Ponzi that they don't understand they are a subject of, right? Like that's basically, this is part of the flow of the money that actually props this up and creates these overvaluations. So, for example, one thing that really stuck with me when, 3-4 years ago, I heard Saylor talking about, like his challenges and stuff, like, okay, how do I allocate my capital? I loved it when he said about actually returning capital to investors signals the dumbest thing. It's like, okay, I have a lot of cash. I don't know where to invest it to grow my company. So the best I can do is give it back to you. When he said that, I was like, you are 100% right. And then later, when I learned more and more about stocks and that there's like people like the dividend guy, right? And all the FIRE people are all into dividends and stuff. it was funny. Like that actually blew my mind. That these people are acting in finance and they don't understand that they're propping it up, basically, that they are getting this dividend from companies that aren't able to figure out with billions in cash how to optimally allocate the capital. And again, so this in that part, I do agree with you. This is obviously where Bitcoin comes in. Like it's very, very obvious, right?
Yeah.
But I love that disconnect existing still.
You know what? This is a bit of a stretch, but I always think about this. Do you know, okay, the hundreds of years ago, the like geocentric model of the solar system, that was accepted as like the Earth was at the center of the solar system and everything went around the Earth. To make the geocentric model work, you had to add these epicycles, these little circles that all these celestial bodies were adding to their orbits around the Earth, which had to be at the center of the Earth. So you're finding you're like creating these little details to accommodate this big model of like, okay, that clearly the Earth is at the center of the solar system.
Yeah.
And that's what all these like dividend guy things amount to. Is like they're trying to make epicycles to justify like to accommodate this fiat model that they think is the gospel truth.
Yeah, I said S&P 500 is the sun. I meant S&P 500 is the Earth. Yeah, and around that you have all these.
Yeah, like the Earth, and like
but it's like these financial advisors say you should diversify, you should do this, passive this. Yeah, I fully agree. And it's funny, actually. I mean, what I just mentioned about what Saylor said, that for me made a lot of sense, just objective sense, right? Without having, again, like a finance background or whatever. But like, yeah, if you have a lot of cash, means you're doing well, means you have opportunity to grow, to do even better. And if you're not allowed to do that, you're not actually really good at what you're doing initially. I would just say in a business sense.
It's almost like it's a Bizarro world thing, right? Like that's like from Superman comics, where there's like the Bizarro world was the total inverse of the normal world, and that's fiat, where dividends are good. Debt is good. Taking on debt as a country is good. You need to have 2% inflation. That's good. Like all these things are totally like Bizarro. They're totally inverse of economic reality if you understand Austrian economics and sound money. But we've been told these things that are ridiculous, and we have accepted them as gospel truth, and everybody accepts them, so it's normal. But once you become a Bitcoiner, you see it as bizarre.
Mm-hmm. Yeah. So I see some people say that for public companies, allocating to Bitcoin could be like a Hail Mary. Obviously this is how Saylor pitches it, right? Rather than a good or prudent like financial or treasury move. I personally think that doesn't make sense. I mean, we saw, I think it was Figma IPOing, although they don't have spot Bitcoin. They had like 70 million or something in IBIT. Also a lot in treasuries, way more. So, you can still debate if they are doing it in the most optimal way. But I just thought it was interesting that something Bitcoin related was on there. Actually, Saylor doing it as a Hail Mary proved out to be a very prudent financial move. So, just want to tap in on what you think.
Yeah, I get why people view it as the Hail Mary thing, but I think I think about it in terms of the burning platform of like people are going to be willing to consider changes to the norm if they need to. If they have an existential reason to be open to alternatives, then they're going to be open, and they won't be until those conditions are what they're facing. So in Saylor's case, they needed to find some solution. They needed to change, otherwise they were going to die as a business. That's existential. That's a platform that you are standing on that suddenly is now on fire, and you need to jump. But to where, right? What are you going to change? And so, Hail Mary, yeah, But I think it's better to think about it in terms of companies that are facing existential threats are going to be open to considering Bitcoin as a solution. And those that aren't, like Dell or certainly like the Mag 7, are going to be disinclined.
Yeah. All right. I think this is a fun question for you because I do think you are a Bitcoin maxi.
I hope people.
I know. Sorry, I had to say I know. I know, guys. Okay. So, do you think Bitcoin Treasury companies might undermine the kind of like libertarian aspect of Bitcoin by moving more coins out of, private cold storage into, I think we've talked about it to some degree, potentially vulnerable, regulated corporate treasuries? Does that raise risks of government intervention, even confiscation, akin to the 1930s gold seizure?
Yeah, this is a great question, and I'm very sympathetic to it because I think it's a concern for a good reason. Like, yeah, I think that what we always knew, or at least I always had the view that Wall Street would eventually be involved in Bitcoin. Like Wall Street would come to Bitcoin. Wall Street would think that they were going to come save Bitcoin or whatever, but really Bitcoin is consuming Wall Street. I figured that would always be the case. I think this is how that is happening. And that was always going to happen. TradFi was always going to become linked with Bitcoin. And this is that in process. Bitcoin was always going to mature as an asset class in the global asset landscape and become linked with TradFi. And this is that. I think that there were cypherpunks who believed or dreamed that everyone would adopt Bitcoin on their terms, on the cypherpunk terms of like, you're gonna run your own node and you're going to have steel plates with your seed phrases stamped in, and you're gonna use coin joins and mixers, and everyone's gonna have privacy, and like you're just gonna have to learn how to use Bitcoin. But like I don't know how to do how to set up my own email server. I don't know. Very few people in the world know how to do that. We end up using this technology that's been made easy for us by companies. That's just how technology adoption into the mainstream goes. Like cypherpunks are not mainstream; they are freakishly technical and principally driven. And most people in the mainstream lack both of those things. So that's just a reality of technology adoption. If you want it to be the biggest asset in the world, you want the mainstream to adopt it, and that's going to come with, that adoption is going to look different than it did for the cypherpunks. That's just the reality of this thing. Now, does it create concerns for centralization, for potential honeypots of governments nationalizing these Bitcoin treasury companies? Yes, that is non-zero. In a cypherpunk form of adoption, that is zero, but in this form, it is non-zero. And again, I think it's just the reality of how the world works, how people work, and how economic incentives work, where companies are going to pop up to provide Bitcoin yield by tapping into capital market tools because individuals don't have access to those tools. That's just a reality of economics. So I'm sympathetic to that because like it does come with some risks, and I do think, and I've put this this analysis out on Twitter. I think Bitcoin treasury companies are going to accumulate like half of all Bitcoin over the next 20 years. They're going to be the major bidders, I think, for Bitcoin, and it won't be governments because governments don't have the mandate to not take profit, really. Like even if a government accumulates some Bitcoin, once it goes up 2x or maybe 10x in value, they're going to say, look, great, we can fill some of our debt hole. Let's sell it all, and then plug some of our of our current year fiscal shortfall. Which is what they're talking about doing in the UK. Like, so anyway, so I don't think governments are going to save people. I think that Bitcoin Treasury Companies are the private sector finding a product market fit with, like, people want to grow their Bitcoin exposure over time. Hire this company to do it for you because they are plugged into capital markets, and that team is focused on delivering Bitcoin yield. This is just the reality of how these things go, and I still think that ultimately Bitcoin Treasury Companies are going to be the tail that wags the dog. Like, they will end up having more and more influence on capital markets and on regulators and on government as they grow in size. And what we're really hoping is that rule of law prevails and these things aren't nationalized in the West. I wouldn't invest in a Bitcoin Treasury company in North Korea, but I believe that political capture, Bitcoin will politically capture, and already has, I think, the power structures of government, and that will increasingly happen because you can't piss off Bitcoiners. They're too meaningful of a voter base and a donor base now, so that becomes untenable, and you have to work within the rule of law. And then Bitcoin Treasury Companies are like the private sector solution for mainstream adoption.
I really want people to listen until 90 minutes here, because this is I think this is a critical point in this conversation. So I'll just go on a little tangent here from the top of my head, replying to what you just said, because I have a mixture of feelings about it. Okay. For one, I agree with you that this is probably how the world works. Unfortunately, I have to add to that. I do want to push back on what you said as like Bitcoin as technology. Like, I don't really know how email works and stuff like that. Like, yeah, I mean, yes, analogy wise, I fully agree. I couldn't tell you what a SMTP server or whatnot, how that works. So yeah, okay, conceptually, I agree, but I think you would agree that the whole idea of Bitcoin is basically disabling the inherent, corrupt, innate ability we have as humans that are accelerated by broken fiat money, right? So people following perverse incentives, negative incentives, that's why we see all the problems that we have. Everything's downstream from the money. These are all the other discussions that we have. I know you agree with that. I also think we both agree to the fact that not everyone will see it, right? The Yuppie elite will never see it, which is a pity. And again, yes, that is how the world works. But having public companies or private companies save you with their Bitcoin, etc. Sorry, man. Like, I think that is very far-fetched.
They're not going to save people, but they're going to provide a vehicle for people to use.
Yeah, but you're still using the old rails. You're still using, fiat in that sense. So, because we talked about like how this machine of sloshing this capital around also creates opportunities for people to take, stuff off the table, and basically unknowingly putting a lot of people, i.e., a lot of capital, into this little machine that, a very tiny group of people that don't care about your individual prosperity. Lead basically, right? So for me, that is where it kind of, these fists go together. I think, like, yeah, I maybe utopian thought or very naive, but I would love for more normie people to figure out this Bitcoin thing, and in that sense, siphon away capital from this parasitic financial system into a financial asset that they can own and control fully by themselves, as an individual person. So yeah, I think I had more to say, but yeah, I mean, I think you know where I'm going. But like, I find that, difficult.
That I know I understand, and I agree to a large extent. I mean, like, it would possibly be better if we all had the capacity to do the cypherpunk form of adoption, and that these economic incentives didn't exist, but they do, and I don't think that most people have the capacity to adopt Bitcoin in the cypherpunk version of it. It's funny too. I mean, like, I think that Bitcoin Treasury Companies will become part of important indices like S&P 500 or in the UK it's the FTSE 100, and then people who are putting their retirement money into the indices are putting money into Bitcoin, right? And then benefiting from Bitcoin as it does its thing over time. And then those people become kind of backdoor advocate, like they backdoor themselves into being open to Bitcoin. Like, oh, Bitcoin has been part of why my stock portfolio has done well. Maybe it's not such a bad thing. Maybe I like Bitcoin. Turning that, like, I think we're going to see like a growth in mainstream support for strategy, like as it becomes an important contributor to people's wealth, who aren't Bitcoiners, but turning that into Bitcoin adoption in the sense of like, okay, those people then need to also get their cold storage stack. That's hard. And I don't know how that happens. I think there's an opportunity there, right? Like, Bitcoin Treasury Companies, can help soften sentiment and open people up to Bitcoin, but they can, that doesn't necessarily mean that those people will take that extra leap. And I think there's a risk there that they don't. But that's also not the fault of the Bitcoin Treasury Companies for like having done part of the job there of like, look, we've introduced Bitcoin to your portfolio, and now you know a little bit more about it and you like it. But it's not on us to, hold your hand on figuring out that you also should have a cold storage portion. Like, that's on the individuals. It's on us as a Bitcoin community more broadly to try to find the ways to effectively do that. So, I'm also torn on this point of like, I think Bitcoin Treasury Companies will be the mega trend of the next 20 years in global finance. And that's going to be a good thing for Bitcoin. And it's also going to challenge some of the ideals of Bitcoin, of like, especially, decentralization of money. But, even if like the mainstream only gets exposure to Bitcoin via Bitcoin Treasury Companies, well, the world is still a better place because you're demonetizing fiat and you're transitioning people into using Bitcoin as the primary treasury asset, and that is the asset that nobody can make more of, right? So like, even if people don't understand Bitcoin enough to take on cold storage, if companies are kind of forced to adopt Bitcoin in order to keep up with other companies, and then Bitcoin gets normalized as the best treasury asset, that's still a win. And hopefully we can find ways to get people that one step further into like, oh, and you should also have some cold storage Bitcoin.
I think it's just it's very delicate, right? There's a certain, I mean, from my experience with like startups, entrepreneurship, like the idea that you start with is not necessarily the idea that works at the end. I'm not saying we should deviate from the original Bitcoin idea. I'm just saying that the way that it's adopted is very hard to predict, right? So you start with a certain idea. I would love for that idea to go all around the world. I think Bitcoin is the best attempt at fixing money. This is the only attempt at fixing money, and bringing all these values and principles that emanate from it to the world. So I think that is why I'm a Bitcoin maxi. I think what more people should realize is that, one, what we said in the beginning, like, it's money for enemies. So yes, it's also money for TradFi. They figured it out before, a high amount of plebs figure it out. I think still, just the plebs own more Bitcoin than institutions, right? So in that sense, that is good. But it's very hard to predict who will adopt it and also at what speed. So I think that's one thing that I would want to share with people is like, okay, yeah, there is this thing, but how it fits in the world is something that we are trying to meme into existence literally and talk into existence and all these things, right? So I think we are doing that, and more people are doing that, right? So okay, don't stop talking about Bitcoin, start another podcast, and do all these things, please, and talk about it in your own way. But the future is so hard to predict. So with what you're saying, I'm just thinking like, what would I be happy with, right? To see. And I think we also touched upon, if these companies become the new Mag 7, right? Like the top Wall Street type companies or financial world companies. I think net, that would probably be a positive. That would mean, Bitcoin is like a legit asset. So that is perfect. I don't want to go on a long tangent, but I think that's just interesting, like how delicate it is to also kind of philosophize about it. Like we cannot really predict the future, but maybe to go back to my point earlier, I think, and I hope actually, that only the companies that have true Bitcoiners at the wheel will actually succeed. That will probably also happen, I think, just by how they respect Bitcoin. So yeah.
And in a funny way, that's based on how the management team resonates with the community. And it's, there's a funny dialogue there of like, with Bitcoin Treasury Companies, it's a product market fit of like, does the investor base of basically Bitcoiners who are interested in taking risk with a portion of their portfolio, does the management team resonate with those potential Bitcoiner investors, right? And I think that's what you've seen with Strategy and certainly with Metaplanet, and I think also with Smarter Web, relative to some of the other competitors in the UK. Those are all run by people who understand Bitcoin and really believe in Bitcoin and count themselves as Bitcoiners. And I think that the community of possible investors, filters out and rejects, in the early stages, pretenders, which is a great thing for Bitcoin. And because you want to see, like, management teams that really understand and really believe in Bitcoin be the banner carriers for that capital market and be the leaders in that capital market of a Bitcoin Treasury Company strategy. So, it's funny how, like, it kind of brings it full circle here of like, the community does matter for helping to select, who are the right representatives of, who are the right people, who are the right management team to entrust with, delivering on the goals of increasing Bitcoin per share. Because they, first of all, they have to understand Bitcoin, and they have to, and that means they have to value Bitcoin above anything else in terms of assets, and want to deliver, Bitcoin yield in terms of growing Bitcoin per share to shareholders, because they value the hell out of Bitcoin, and they want that, they want that for themselves, and so they want that for shareholders.
Maybe one thing to add, I was thinking, what is the end game of all these companies? I think Strategy has now like 3% of all the supply. I find the thought interesting of having more, if the dollar well, it seems like the dollar has a longer lifespan now with stable coins and treasuries, etc. But like, at some point, if there is like a renewed currency competition, I would find it very interesting if Bitcoin Treasury companies or certain Bitcoin Treasury companies could become more like banks, where whatever currency is on top of Bitcoin is actually backed by Bitcoin verifiably, and they have this strategy and financial engineering in place to actually make their Bitcoin stack bigger so their currency is stronger. I find that an interesting thought. Maybe more in general, also the whole Bitcoin as a currency type challenge that you have there. If Bitcoin is just the base layer of value in the world, whether there are other currencies on top pegged to Bitcoin, in my opinion, doesn't really matter. I think this is a different conversation, but I do think there's a non-zero chance that is part of the future where we're going. So I would find that interesting. Yeah, maybe to have some closing thoughts. And I have to ask a question about the Yuppie elite, obviously. How close do you think the Yuppie elite, so the business and cultural mainstream, are to really accepting Bitcoin? And maybe within the context of this conversation, when do you think we'll really see like the first big consumer-facing company added to their treasury? And I mean, I don't want to hear Tesla has it, blah blah blah. Like, what normies would be like, what the hell?
Yeah, such a good question. I don't know. I guess what I've seen with my Yuppie friends is a softening. Well, I guess it's sort of two different realities of like people who listened to me enough to get just a tiny, schmuck insurance allocation to Bitcoin have now softened to Bitcoin. They're all right with it because they're up a lot. And the people who resisted that and never got any don't talk about it. So, they're probably bitter, and it'll probably take a while for them to, swallow that tough pill. But I do see that, the just general seeping into culture that we're seeing with Bitcoin is also permeating into the Yuppie elite class. I mean, it's hard to see one of the two major political parties in the U.S. Embrace Bitcoin without acknowledging that Bitcoin has arrived in the mainstream. Like, most of my Yuppie elite friends are, I guess, aligned with the Democrats, but you can't see Trump embracing Bitcoin without saying like, "Wow, okay, I guess this is like a big thing," and half the country is going to be supportive of it, I guess, by default. So, that's happening. I don't know when we're going to see large, mainstream companies embrace it as a treasury asset. It is kind of remarkable that hasn't happened. You have, I guess you have only really seen so far the like full sailor diehard conversion into Bitcoin. And I guess that's partly because if you see the value proposition of Bitcoin, then you see how much opportunity there is to accumulate it and just go, like full Bitcoin treasury company. So there's still, so much opportunity to do that. If you get to the, high conviction thesis that's what we've seen happen. And the Teslas of the world have only ever dipped a toe. I don't know when we'll see other companies say, you know what, that's been the best treasury asset. Maybe we should hold some. But again, I'm kind of like, I think that the larger the institution, the more committees are involved, the more financial responsibility, fiduciary obligations they have to their shareholders, the more reasons you have to say no, the more reasons you have to not take that risk. And so the larger the institution, the later they will be to adopt. And I think, that's great in the end of the day, because it means individuals have the opportunity to do it sooner. And then Bitcoin Treasury Companies have the opportunity to offer that service to people who believe in Bitcoin and want more Bitcoin. So, it's weird that it hasn't happened yet, but it's actually, I think, a good thing for Bitcoiners that they still have the opportunity to accumulate.
I agree. I think that is what makes it entertaining for me, in a sense that that's the whole joke. If you're a laggard, that will become painfully clear, and the more successful you are, the higher the chance you being a laggard. With major technology shifts, of which Bitcoin is probably one of the biggest ones I think that we've had. So just that I find very interesting to follow. All right, to wrap up, is there anything else that you would want to add?
Yeah, I guess I gotta get in a little plug here for Smarter Web, because I'm so excited about it. Frankly, I think there's going to be a winner take most in each capital market in the world. I think we've seen in the U.S. the winner is Strategy, in Japan the winner is Metaplanet, and I'm excited that I see that taking shape in other countries too. And it's happening like now, right? And so I think you're going to see metaplanets play out in other countries. I think it's quite possible that Smarter Web is on that path, and I'm excited about seeing where that goes over the next year and beyond.
Yeah, me too. Just following with attention. What do you think could be our conclusion of this hot debate?
I guess from my perspective, it's like I love how we landed on these two really red flags that pop out, and Bitcoiners like reflexively know to take issue with, of like, it's about community and we're generating Bitcoin yield, right? And those two things just sound like such red flags. And I hope that people who listen to this have walked through how, on both of those fronts, what we're really talking about is materially different from the problems that have come with those two topics, with altcoins and ICOs and stuff in the past. And hopefully just those two topics right there help demystify the fundamental value that I think Bitcoin Treasury Companies are providing to investors.
I think it was a good conversation. I'm very happy that you were a good sport and we were able to do this. I hope this was valuable for people. I think also, most importantly, to just think about their own understanding of what this is. I think the perspective of understanding that this is very new, that this is a Wild West, that you should have Bitcoin in cold storage before you do anything with this. I want to emphasize that.
And I agree. I think that's a better way to approach this.
Yeah. I still have my doubts, just because of human psychology, I think, about the impact of the damage of people that will fuck around and blow up. In a sustainable way, it would be very negative. I mean, there's still people in crypto after FTX, after, Luna blow up and whatever. And I don't know if that is necessarily less capital than before. It might be even more, right? So, I don't know if people really learn from these busts, but I love Bitcoin so much, and I want it to succeed, that I am still quite concerned about what the secondary effects would be, or second order effects would be of that inevitably happening. So you didn't really convince me there. I don't that's not to blame you, but I just think maybe that is something that people in general should take into account. Like, and people are gonna fuck around, like that is just.
And I think I didn't convince you there because people will fuck around.
Yeah, I mean, there's nothing to take me to the opposite side of that argument. Because I don't think it exists. Yeah, I just want Bitcoin to succeed, and I think it's a very delicate thing. So, that is, I think, what I would end with. So thank you. I hope people found it valuable. Let us know in the comments what your thoughts are, how your ideas changed. Reach out to us, tag us on Twitter, whatever, and let us know. I hope this was valuable, and thanks, Jesse.
Yeah, thank you, Bram. This was fun. We'll revisit it maybe in the next bear market.
Yes. All right. Thanks, brother.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for a next episode. Bye.